Hello, everybody. It is the day after Super Bowl Sunday, and wasn't that a game? That first half was kind of boring, and then Usher came out and lit up the stage. The football players must have been embarrassed because they came out and had a heck of a second half and an overtime. My prop bet did not go through. I had Kansas City winning with the under, but with them having had a 14-point lead at one point. So I got the under, I believe by just a point or two or a half a point, and Kansas City won, but at no point were they up by 14 points. And that is really what gave me great odds on this bet because I was betting both the under and a big lead. So I was looking for like 30 to 17 or maybe 27 to 13, something like that. And I'll tell you, San Francisco played great. I think Kansas City played great. Those defenses were just off the charts. Anyway, fun game. I call it Super Bowl Junk Sunday because the junk food where we have our party is off the charts. So I am fasting today because I really don't think I need to eat till about Thursday at this point. So investing, you want to talk investing. Okay, retirement income options, time to sell covered calls. I'm going to walk you through how to figure out when to sell covered calls. Now, on Saturday, and I just got this posted recently, Shooter and I did a pretty long major markets. I didn't realize it was 44 minutes long. I apologize. As with any time you listen to me on the interwebs, change your setting to 1.25. Don't listen to me at regular speed because unless I'm on 3 coffees, I'm slower than everybody else. So change it up to 1.25, maybe even 1.5 speed. And if you want to get the Mickey Mouse version, you can turn it to two times speed, and I sound like a Disney character. All right. This chart that's popped up here is basically saying that the stock market, the S&P 500, because that's what everybody thinks the stock market is going to turn over soon. It still has some rally left in it, but we are seeing targets in the lower 500s before the stock market turns over. So over the next week or two, I would think that selling covered calls on any stocks that have really appreciated a lot for you that are also overbought and overvalued, good candidates to trim a little and sell covered calls. Now, micro caps and small caps, there's virtually nothing overvalued and not too many that are overbought. But as you get into the S&P 500 stocks, you're seeing a mixed bag. So let's go through that. If we jump over to TradingView Screener, I'm using their Screener 2.0 here, and I have it set up to U.S. markets, the S&P 500 index, although I could do the Russell 3000 and get almost everything. But let's just stick with the S&P 500 for a second. And then I set up some custom settings. I want to see the weekly charts, not the daily charts, on the oscillators and trend indicators, and importantly, the relative strength index. When you use the relative strength index, the daily reading is really for swing traders, as is the 4-hour reading and the even shorter readings hourly, every 15 minutes, things like that. You want the measurement taken at the end of the week. It shows a longer term trend, and the longer term trend is what you're interested in. Again, unless you are a swing trader. 90% of you are not and should not be swing traders, but the folks who are swing trading would use shorter time frame measurements. Once again, RSI, relative strength index, you're setting it so that you pick when it's going to do its setting, which is every Friday at the close, is what it will be if you use the weekly setting. Measures every week, pretty easy to understand. This is a oscillator that is basically measuring momentum and trend and change of trend. And what you really want to do is know what's overbought and what's not. What we can see is that when you have a score, or from a definition standpoint, if you have a score over 70, something's overbought. That means that probably it's going to run out of steam soon being kind of a fudgy term. At the top of the list, you see Meta, NVIDIA, Hartford, Travelers, a whole bunch of companies with RSI over 70 on the weekly. Now, for those of you who have been around a while, Look how long this list scrolls on. An awful lot of stocks with relative strength index over 70. What should that scream out to you? It should scream out that the stock market is probably setting itself up for a market correction. Now, we have talked about with Shooter, and I have talked about how the next pullback probably should be bought because normally you get 3 waves up or 3 mounds when it comes to relative strength index. We are pretty much right in the middle of this bull market, it seems like. It seems like we are putting in the second rally right now. We'll get a pullback and then we'll put in the third part of the rally. And that should be the euphoria that I talked about at the start of the year. Can the Federal Reserve hold this back? Yes, they can. If they really don't raise rates until the second half of the year, you can see a correction playing out. I don't think Chairman Powell wants that, but he wants inflation to not go back up even more than he wants to protect the stock market. But the thing is, as we know, as the stock market goes up and real estate values go up, tax receipts go up. And the United States really needs tax receipts. So I said that I think the rate cuts will come in the month of M, a month that starts with the letter M. If it were me, I would lower rates by a half point in March, and I would explain it this way. Inflation seems to be under control. Disinflation has clearly been taking hold. We're not starting a cutting campaign. We're just taking that last rate hike off the board, and we'll reevaluate the rest of it later. And by the way, the banks really could use a flatter yield curve, not the inverted one that we have now. So we're just going to take that last rate hike off the board. It's not the start of a rate cutting cycle. We're just undoing that last thing that we did because it appears that maybe we didn't need it or that it did its job. Now, do I think that's going to happen? I don't know. Probably not. If it does happen, you can send your cookies and ice cream to me. I'll give you my P.O. box. What I actually think is going to happen is that they cut in May because that is when the Treasury is going to need the money. Tax receipts will have fallen off by then. More banks will be struggling because of the mini commercial real estate crisis. So I would think that they cut interest rates a half point in May, and they might even explain it about the same way that I just did. I think they should do it in March. In fact, I thought they should have done it at the last meeting. But again, I will admit, Jerome Powell doesn't call me. He should, if nothing else, so we can, talk about other stuff that I have questions about. Would love to be the fly on the wall in some of those rooms, right? In any case, probably a little correction coming. The Fed could make it worse. I don't think they will. But Shooter was basically saying second half of March, market should turn over. Into April makes sense to me. So if I had to narrow down the time range for a correction, I'd say second half of March into April. By May, everybody will be anticipating the rate cut because we're having a correction. And oh my God, suddenly it seems like we could have a recession. And we won't because we've seen the GDP in the first quarter is going to be positive. This is supposed to be the bad quarter every year. It looks like GDP for the quarter will be well over 2%, even though all the projections were for 1 something. If you go over to the Atlanta Fed GDP now, you can see that this economy is not weakening at all. And one of the things that is actually holding back inflation is that a lot of the low-end jobs that were going unfilled and business owners were having to pay higher and higher wages are suddenly getting filled again, mainly by immigrants. We can see that throughout the country. I was in the city of Milwaukee this week because I had to deal with that elderly friends problems. And I stopped by a couple of businesses where I know the owners, happened to play poker with them. And I just said, hey, how are things going? I was in the neighborhood, thought I'd stop by. Haven't seen you in a while. And talk shop. One guy's an auto dealer. He actually bought a bank property and made it into a car dealership. It actually looks pretty cool because it's a 2-story car dealership now on a big corner. It's actually one of those corners where 3 roads come together, an angle road and then the 2 regular direction roads. I couldn't find even a hint that they thought the economy was slowing down. One guy was a contractor, the other guy owned the car dealership. Now, are there layoffs going on? Yeah, big tech is actually doing layoffs. And why is that? Because of the artificial intelligence. They don't need as many coders. They don't need as many people doing tedious functional tasks because the AI is either doing it or getting ready to do it. Skilled labor is going to be just fine. and unskilled labor is going to be just fine. But kind of that in the middle, you better figure out where you're at, right? If you're an MBA or a coder or some middle management person or some data entry person, you better be thinking hard. This is where I would encourage every 19-year-old who doesn't know what they want to do with their life, go learn how to do something. Plumbing, electrician, operating engineer, right? Big machines, driving around big stuff, ironwork, steam fitter, sheet metal, anything where just a little bit of sweat and a little bit of knowledge will increase your pay, because at the margin, most people don't want to sweat and most people don't have a skill. If I couldn't do what I do, I'd probably just go and be an electrician or a plumber. I've done both of those things. If I had to have a job like that, I'd really probably just go to Vegas and gamble until I went bust, and then I figure it out. Now, back to this chart. You'll see that a lot of these things say buy and strong buy. The one I want you to look at is the oscillator rating, okay? What is an oscillator? In short, an oscillator measures trend and momentum and the change in the momentum of the trend. So it is the change within the trend. And when momentum starts to weaken, the trend starts to break down. Somebody just made me laugh in the chat. Comments like that Vegas comment are what make me trust you. Momentum oscillators help you understand whether the trend is getting stronger or weaker. And when a trend is getting weaker, it's time to go, right? Remember that song? Things that make you go, So when the momentum oscillators start to get weak, that is usually a signal that they're going to turn over. Not always, but usually. So when we look here and we combine these two things, oscillator rating and relative strength index, we see that these are overbought on long-term time frames, right? 14 weeks is over a quarter of the year. I actually use 12 weeks or 13 weeks, but the preset here is 14 and it's close enough. The oscillator rating, if it reads buy, you're probably okay. It isn't slowing down a lot. And if you know something about the company here, Meta, a lot of people think that it's undervalued. So if you throw in, and I added this in place of something else, if you throw in the PEG ratio on the 12-month look back, you'll see that the PEG ratio for Meta is 0.43. Generally a number below 1 or around 1 is pretty darn good. That means that the growth of the company divided by the PE ratio is coming out to be 1. So if the price to earnings ratio is 50, you go, oh my gosh, that's expensive. But not if the growth rate is 50%. In the case of Meta, the growth rate's actually higher than the price to earnings ratio because Meta was out of favor for a while. Now it's rallying and it's growing and they're buying back shares. So maybe Meta does double over the next 3, 4, 5 years. A number over 2 is a flat out warning sign. So you see that a lot of these aren't overvalued probably by a pretty simple measure of valuation that Peter Lynch used over and over again. And I prefer the forward, but the backwards isn't that far off. So like the Travelers, a 1.85 PEG on a company that's not a growth company, you really would have to evaluate their actual portfolio of investment to have a good idea of whether or not this one is overbought. Because insurance companies have a lot of money in bonds, they could maybe do pretty good if interest rates come down. My guess, this is pretty fully valued. Why don't we even take a look? Not that we own this. I just want to take a look and work it through with you. Let's take a look at the last 5 years. Stock fell off here. Back a little further. Drifts up, falls off, drifts back up. And it seems like it's really rallying hard right now. What are some of the things we know about insurance companies? 1, bond portfolios. 2, good underwriting means they make a lot of money. 3, AI and drones have really, really cut their labor expenses. So the question becomes, are these guys just starting to realize the cost savings on labor and the benefits of technology, or are they near the end of that cycle? And what I can tell you is that they're actually probably near the end of that cycle, because I've been watching this with Allstate for about 5 years now. They had started the technology move in the late teens, 2018, 2019. COVID hit. All those people started working from home, the adjusters, everybody, and their technology programs really took off. The adjusters started using drones. They started changing their underwriting processes because they added technology and that helped. And I think this rally for the insurance companies has gotten ahead of itself because it anticipates the rate cuts which will benefit their bond portfolio. So if I'm a Travelers Companies investor, I'm looking at this and thinking, this might be about as good as it gets. Let's compare it to the S&P 500. Let's go back to when the market corrected in 2018. Compare it to the S&P 500. S&P 500 has beat the Travelers. See if I have that right. Okay, this is with dividends. So here's my question for you. The Travelers has not beaten the S&P 500. Why would you own it? This is a rally that I think you can sell. Why? No relative outperformance, and any one stock is going to be more risky than the S&P 500 in most cases. Very few handful of cases where that's not true, right? Some of your super rich franchise companies like Microsoft and Apple and Amazon and Google and Berkshire Hathaway and probably Meta, right? Maybe there's 10 or 12 companies in the S&P 500 that are significantly lower risk than the S&P 500, but also carry more upside. That's why we get the Magnificent Seven, which, as we've discussed, and it was on Bloomberg today, 2 people talking about it, should really only be the Magnificent Six. But that wasn't a movie, so they can't say it. But they hinted that maybe they'll make Salesforce the next Magnificent Seven stock and kick Tesla out. So very few companies have more upside than the S&P 500 and less risk. Probably, I don't know, 50, 60, 70 companies with similar risk to the S&P 500 and more upside. And then about 400 stocks with either lower upside or more risk or both. Those 100 to 200 stocks that I call the zombie stocks are in that category of lower upside and more risk, right? Can't even be a moonshot on accident. So in the case of the Travelers, we're seeing that significantly overbought, probably a little bit overvalued. The technical indicators haven't turned over yet, but this is no longer strong buy. So it's down from strong buy to buy, probably heading to neutral soon. Right now would be a good time to sell a covered call and probably trim some of your Travelers stock because it doesn't beat the S&P 500 anyway. So why bother? Why take that single stock risk? What if they get whacked by a hurricane or a tornado? They have big losses on their underwriting portfolio. What if we really are higher for longer on interest rates and the presumed cut in interest rates, even though I think it will happen? But what if it doesn't? Then their bond portfolio doesn't get better. What if they have some hidden commercial real estate losses that nobody's really thinking about yet? These are all the things that you should think about when you're investing in a company. It's not just, hey, I'm following Kirk in because he's in. I want you to think about all the reasons why I'm doing it. Last couple of years, I've actually been pretty aggressive in my stock picks because I've been waiting for this huge rally in small caps because all the historical data says it's got to happen. Maybe it's different this time. I sure hope not, because usually it's not. It's never been before. Oh, but maybe there's a first time. So anyway, screening for stocks. I'm just using the technical charting. I don't know why it's last. And then I went over here, right click, column settings. I changed it to 1 week. I actually don't know how to save this screen, and I'm going to try to because I'd like to just save this instead of setting it up every time. I'm sure there's a way. This is their new screener though, so I'm not sure how. But as we go through these, any of these that say neutral or sell, right? There's all safe. So probably you should know what's coming for Travelers. Any that say neutral or sell, you should probably be trimming and selling covered calls. Or if you're like me, maybe you just sell almost all of it. Keep very, very little just because right now the trend is still on your side. Arista Network, a company I really like. Looks like they're peaking out. Take a look at their chart. So they've crushed the S&P 500. That means that you can have a little bit of love for it. End of 2018, when the market bottomed, beating the heck out of the S&P 500. This is what we are trying to do, right? We want to find outperformance. If we're going to bother with single stock risk, we want to see these sorts of alligator jaws open up for us. We know eventually it'll close a little bit, but if you take a look at the chart for Google or Apple or Amazon or any of the Magnificent Seven really at the moment, the only alligator jaw that seems to be closing is Tesla. So you take a look at this, and then you start playing with your chart patterns. Okay, let's see what the auto chart has to say. Okay, no auto. Just take a look at the fan. Really likes it, right? It's right at this point, probably bounce down to here, then maybe shoot back up to here. So we could be looking at over 400 on Arista in the next couple of years. What is the longer term trend? Let's move that off. Longer term trend isn't that generous, saying that it's pretty much at a spot where it should turn back. One of these two lines are usually pretty strong resistance. It could come all the way back down to this blue line, 175, 180, which is where I had my support. So I'm going to move this up actually out there. Look at that. Look at that point. I didn't do that on purpose. So my bottom fishing probably move way up here. And I'm looking, so you can't see what I'm doing today, but I'm looking at the left side over here, the volume. Where does the interest ebb and flow? And remember, volume interest usually moves up. So could this get into, oh, look at that. That's even a support line there, support resistance line. So I'm actually going to make these permanent. Overlay. So somewhere in this white zone between these and between these, probably as bad as it gets. This line probably holds unless something really bad happens. So if you can get Arista under 200, probably a buyer, right? Look at that support line right there. These have to do with Fibonacci's. But where it is now, probably a good spot to trim it and sell some covered calls. And if you went through all of these, especially the ones that say neutral or sell, almost all of them, you'd want to trim, sell some covered calls. Do you own any of these folks? General Electric? Anybody own General Electric? Oh, General Electric hasn't been able to beat the index since 2018. Yep, actually it did. Look at that. General Electric rallying. So is this real? How real is General Electric? Probably something that we want to learn about. I had some old drawings on there. Okay, so let's look at this pitchfork. Pretty big support. What does that? Love the S&P 500 on it. So the long-term trend is still down on GE. That sure looks like an inflection point, doesn't it? So what does the shorter-term trend look like? Really wide, but generally up. So this red line might hold. If it turns over, gets to around 130, maybe GE is a buy. It could break all the way down, get back into this area that our charts say. Yeah, right about there. So I can take my little handy dandy line and give myself a shortcut and say, okay, there's huge interest right there. That was a breakout. That was the breakout when it got past this resistance. All that interest right here caused it to break out. So to get back down there wouldn't be super hard, but probably it holds just above that area because people who bought in here are already selling. So the next sellers are not very big volume. Bottom fishing, see the huge support down here, moves up to here. So I'd say bottom fishing, see this area that it flirted with. No, they have big pension liabilities. I'd have to look. But based just on the chart there, that air gap right there. Somewhere in the 70s, be hard to see it getting much below somewhere in the 70s. In fact, that should move up just in case some of those people are left to sell. Bottom line should really be more fundamentally driven. I'm guessing right now. There you go. I will adjust that later. I don't think it's going to get on our we care about list too much, but just using it as an example. That long-term one matters much. I think this really was an inflection point. I think this is the range. If I had to guess, it probably would hold pretty firm around 90. But if you can get it down here, and you like the jet engine story, and you think that they've turned it around financially because of all the things that they sold, yeah, maybe GE around 90 or under 100 is interesting because we saw that it has started beating the S&P 500, which I think should be a criteria for you. In any case, you see any names that you want to go over? Costco, I guess. I know some of you own Costco. Back these out. Take a look. It broke out. Will this become support or will it go all the way back down to the next level of support? Hard to know. What does the long-term chart say? Looks like it probably holds this area. What does this one say? Oops. Yeah. So Costco, you don't need them both. Costco probably holds maybe even way up here. The thing with Costco is I think people are more committed to it than church in many cases, right? I go to Costco more than I go to church. Probably shouldn't say that, but it's the way it's become. Mainly because people handle the churches, and I'm not so convinced in the people. Even though I'm an optimist, right? Go figure. It's always so confusing. If it did come down, this really looks pretty strong, this area here, around 600. So where are we at? We're at 722. Unless you own a ton of Costco shares, you probably can't even write cover calls, right? Some of these high-priced companies. So at this point, I'd probably say sell a little bit of Costco. Not much. It's overpriced maybe by 120 bucks. 120 bucks in the 72 is 1/6. So maybe sell 1/6 of your Costco shares. Maybe 2/6 or a third if you really want to lock in some profits. Because probably you bought it a while back. All right. So as you go through this, these are your shortcuts. Look at the sell and the neutrals as probably your best candidates. especially if they have a peg ratio and you have to add this, right? Go to plus, you add it, right? And if they have peg ratios approaching 2 or over 2, and remember, this is the last 12 months, not the next 12 months. It means it's pretty much priced for perfection if it's around 2. So even Microsoft, hard to buy it here. I mean, it's hard to ever sell Microsoft, but it's hard to buy it here. So here it's saying that the trend is ending. Can you actually justify selling Microsoft here? And again, I'm using the bottom of 2018 as kind of the baseline for about how bad the stock market could get in an Armageddon. We were using the 2014 to 16 flat stealth bear market, but I think the odds of us ever seeing those prices again are pretty low. So let's take a look at this. This is basically saying that Microsoft is fairly priced, right? Very long-term trend. It's at the bottom of it. Now you can make an argument that it should bounce off of this and stay on the underside of that. Why? Because it starts to get really expensive as it goes through those zones, and those zones are pretty narrow. So let's take a look at the shorter term trend. So from the inflection point, saying that this red line is where it should be, which is, it's hard to see, it's right where it is. So again, very hard to sell Microsoft. You'd really have to be trying to outsmart the market, I think, to sell Microsoft. I understand trimming it back if you got an overweight, because I've done that a little bit. But right here, your long-term trend and your shorter-term trend are both saying it's close to where it belongs. You should certainly buy it on a pullback right around 350. If you got Microsoft around 350, probably a good spot to buy it, right? Because the odds of it breaking out of its uptrend totally is really low. Even if it does, all these lines right here are just different types of support. So that's when they bunch up, that's like super strong support. So could it get to the 330s, 320s? Sure. Somebody asked about AbbVie. Did you see it on here? You can do AbbVie. I just don't know if I have to type it in or you saw it. So AbbVie. So that's not so good for you. It says that it needs to come back down to about 140 at least. Let's take a look at the longer term trend. Same thing. So a pullback to the 140s looks like definitely could happen. The reason that the chart can be wrong is if you know something fundamentally about AbbVie that says that it's going to break out, just keep on going. So that would be some new source of revenue, something along those lines. I always forget which company basically cured hepatitis C. Was it these guys or Gilead, or I always forget. But one of the companies just they hurt themselves because they actually cured something. It was Gilead, yeah. The company who makes the HPV shot? Does anybody know that one? Is it Merck? So Merck is probably going to take a hit on the HPV shot. You know, now that all the kids are getting that vaccination, so that was an uptick. But what they're finding out now that it's been around long enough is that the HPV shot actually probably cures HPV in like 85-90% of the people. It acts as a therapeutic. So there'll be a surge in everybody getting it, right? Because 70% of the population has HPV, right? Just that one party. 70%, 2/3 of people have HPV, and they're vaccinating the kids, but you're about to see a wave of adults get that shot as a therapeutic. So that'll be an uptick. But what the studies that they've put together show is that after the third shot, you're pretty much cured of HPV. And a lot of people are going to want that because HPV causes cancer in some people, besides being kind of icky. So, you know, when you start hearing about this, and you will, Merkel will have a rally, and then just understand after a couple of years, ain't nobody going to be left that needs it, right? I mean, they'll still keep giving it to kids, but that's not a big uptick anymore. That's kind of the baseline now. With AbbVie, I don't know if there's a story like that. It just technically looks like it should be breaking down. Will it get all the way down to 118? I don't know. This probably should be way up here. Full market support based on volume. So 150s, I think, is almost a given. Then that air gap right there. Yeah, it could get under 120, it looks like. Again, I don't know enough about the fundamentals to know that, but I can check on Value Line and Morningstar and the composite report that you get at the brokerages to see what the outlooks are for earnings. But I don't know their pipeline, so I can't give you a definitive answer other than it looks like it's going to pull back if there's not new revenue. I hope that helped. Moo. Somebody wants moo. Moo in here? You see it? So what I can tell you about Micron, that's where my high price was a long time ago. Haven't been down there since 2020. Okay, I haven't looked at this in a while, as you can tell. Here's what I know about Micron, because I've been reading up on the semiconductors. Samsung wants market share. and the NAND and the DRAM markets have loosened up a bit because of the new technologies that are out there. So they're not as much of an oligopoly as they used to be. My guess, when I do some clicking here, is that this is going to say it's going to go down into the 70s or 60s. Let's take a look. Oh, that's pretty good. That's the long term. So maybe it holds up in here, stays in the 70s. Let's look. I bet this turn it over. Oh, it's widening out. Hard to know. Not much definitive there. In a bad market, it's basically saying it can go down to 50-ish, but it's not unfairly priced based on technicals. But that's a really wide, right? That's really wide. That means uncertainty. So this is where you have to rely on your fundamental knowledge of the company. I will say, I don't give them any extra credit anymore. I bought this company in the teens, and literally in the teens. I bought it way back here. And right, it's been a good ride. 1, 2, 3, 4, 5. Ha ha ha. Triple top, maybe. I think it's a hard company to be in. The story now isn't what it was 7, 8, 9 years ago. We add back in the SPY. It's barely beaten SPY. But here, I mean, even more relevant. Oops, did it go? Yeah. Even more relevant is let's turn that off. See, this is the semiconductor index. So you saw in the grandpa stocks that I took all the semiconductors off the list and just said I'm going to use the index fund. I think that the semiconductor industry is in a secular uptrend that's going to last at least another decade or two, probably 2, because of the advent of EVs eventually happening. And don't doubt that it's going to happen. There's only one thing that has to occur for it to happen. What is the one thing that EVs have to do for them to start beating the gasoline vehicles? There's only one thing. It's so simple, it's off the charts simple. What number do EVs have to make them beat internal combustion engine cars for sales? Just one number. 2 words. Rhymes with cricker price. Sticker price. Once the sticker price of an EV is the same as an ICE vehicle, nobody in their right mind won't buy an EV because the cost of ownership is already lower on an EV. So once the sticker prices are the same, no oil changes, don't have to worry about changing the transmission fluid. There's like no maintenance on an EV except for tires. You're not even going to have to replace the batteries. The batteries are going to be million-mile batteries soon. They're already 500,000-mile batteries. I mean, really, the new ones are. That's what's funny when people talk about EVs is, well, you got to replace the battery after 5 or 10 years is what I heard. The whole I heard thing. I've been picking on people with I heard. I heard this. Did I tell you a story about at the Venetian? The poker dealer was talking about how he heard that illegal immigrants were going to be allowed to vote in the fall. I keep my mouth shut most of the time, except when I'm on stage. But I had to tease them, use my hands, talked Italian and everything. Looked up in the air. Who are they? Are they way up here? You heard it way up there? Had my hands in the air. So when people talk about companies, I heard this. Should set off your bullshit alarm right away. With the semiconductors, secular uptrend, still a little bit cyclical as an industry. Got CapEx cycles, but we got tax breaks coming. There's not a lot of semiconductor stocks I want to own because they don't have big inflection points coming that I can identify. They might be there, but they're hard for me to pick out because I'm still a human. Somebody asked the question about Intel. I was about to talk about it. I still think Intel has a huge inflection point, right? Because it's a whole new industry that they're basically entering, and the government's paying for them to do it. The U.S. government is basically paying Intel to become Taiwan Semiconductor on top of everything else they do. And by the way, remember, Intel still owns majority of Mobileye, which is integral for EVs. So this recent pullback in Intel is probably a buying opportunity. Let's look. So Intel's way down here. Shorten up the time for start of the last bull market. There you go. Autumn of 2023, right? There you go. November. Perfect. That was perfect. That's when the market turned up. So semiconductor index is up here. Intel was keeping up with the index, just had a sell off. There's SPY, there's Micron. So let's just pull SPY out because we know it's never going to win. Take a look at that and go, that's pretty interesting. Because as you stretch it out, look at how much of a gap Intel closed. So it's got pretty strong momentum. It's a heck of an inflection point. So the long term, let's go all the way back to the end of 2016 so that we really get the long term. That long term one is going to probably look still sideways or down. Oops, this one. There you go, sideways to down. That's climbing through it. So let's add the short term. Bam, blasting up. So it got outside of the bands that it should have been in, pulled back in. As it gets right there, look at that spot. About $43, it should come down too much. So, especially if you get it under these red lines, around 40, That might be as good as you're going to get, because look at it holds that price, a 40-ish price right in here, pretty good. So that means this bottom fishing is way too low. Probably is about where that is. So where's your breakout? Your breakout's probably, well, guess it would be right there, right? If it blasts through this other high, it'll keep on going. So it's probably a buy anywhere under 50. That down just a little bit. So yeah, 40, 41, probably your bottom fishing. You know, all the projects in EVs and semiconductors and clean energy, everything got moved back about a year from 26 to 27 for when they really have an impact, right? The early projections were 25, turned into 26, and now we're at like, okay, this is as bad as it gets. Everything's open in 27 and starting to add to earnings. So when you invest today, you should be thinking 3 to 5 years out, right? Now, not 1 or 2 years out. Think 3 to 5 years out. And then in the short-term period, try to figure out where you can buy. Intel 40-ish, right? Look. Just had that one breakdown. Now it's back, chopping around where it's been. Probably going to break back out here. It'll shoot past this, probably shoot all the way up to here. Now, does it break out past 60 something? I think so. I think Intel, get rid of that one. Oops. I think you're going to see Intel in here over the rest of the decade. I think it's going to be one of the great growth stories. So Intel is one of the semiconductors I'll own, because I think had all the downside it can have, more or less, still not a lot of believer. As it breaks out, right, more people jump on. It's because most people aren't really value investors, no matter what they tell you. Almost everybody chases price. So half the people are indexers, and even they panic sell in their 401ks, something I talk about in this week's Global Trends. I've got like 6 articles, half done. We got to get them out. So there you go. Use TradingView, and I can't implore you enough to have TradingView. It is such a good tool, and they're upgrading it right now. Such a good cheat. Look at how many overbought stocks. It's a lot of overbought stocks. I saw a chart from somebody else today, which is why I put this up. So I'll finish with this. This is my QQQ chart. It'll be in the Global Trends ETF. It's outside its range. It's going to come back down to 360-ish, almost for sure. But wait, then it'll go back up. So break down to about this area. And if things get bad, down to here, right? If like the Fed is super tight, if they really are higher for longer, you can see prices down here. I think this chart is right on the money. So look for a correction to 360-ish, 370-ish. Probably going to want to buy it there. I think my buy orders are at 370. I have to double check. But I have a buy order for QQQ 370. I think that's what it's in at. I'd have to double check. But, you know, in a really bad market, right, where it took the elevator down, could it get all the way down to 300-ish, I guess? Probably won't. Still QQQ. I think that this is the start of a breakout. So I think we get a little correction. And then, bam, back up into this area. I think the QQQ is 500 next year sometime. All right. I hope that was helpful. I will give you a couple of ideas based on things that we own for where to sell covered calls. But in general, I really want you to try to use this chart. I just can't tell you how much you should have TradingView. If you're selling options, invest one contract into this tool because it's worth it. All right, have a great day. I'll get this edited as soon as Zoom gets it to me in about an hour, and I will get a couple of articles out today. Take care.